Hey traders, this is Ron Hayden at Market Tamer. Happy hump day. Hope you're doing great. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed by your financial advisor. The S&P via the SPY lost a whopping 51 cents today. There was no video yesterday because the markets were sort of unchanged. There was no change again today either. So we're above the 50-day in orange. That is an institutional moving average. That'll be our line in the sand just for a litmus test. We're above it, it's bullish. If we get below it, we go into a chop, and before the bears get the edge, the market would have to close below the 6.3 price of 274.57. Otherwise, we could have basically a range building here. We take a look at the Dow, similar story, down a whopping 43 cents. It's still above the 50-day. That's viewed as still bullish right now. The Qs, they're underperforming. The Qs did close for below the 50-day, but what I really want to focus on is it actually never closed above the 50-day. 50 days in orange. We tried to get through, couldn't. We gapped up, closed lower, and then we have this area. Qs underperform. We have FTC DOJ, like I've been talking about, related to Google, Apple, Amazon, growing Facebook, Microsoft, and the group. So with all that news out there, the Qs are just having some trouble right now. I get asked a lot, how high do I think the S&P or the Qs or the Dow can go? And the answer is, I have no idea, and nor does anybody really. It can go as high as it wants. One of the reasons I remain bullish is the money doesn't know where to go. It's the most liquid market in the world. It's attracting capital because there's dividends being paid. It's why companies are buying back their stock. Interest rates are low, despite the recent rise. And you put all that together, you can't run, even though I've been to Australia, I love the people, you can't put your money in Australia. It's not liquid enough. You can't go to Beijing. You can't go to Russia. You can't go to the Europe. There's no other market left. It's the biggest and easiest pool to get money in and out of. So if you ask me for an estimate, which is purely a guess, just like I said a couple years ago, 20, 30, 40, 50% higher, some of you guys thought I might have been smoking something, right? And this is the SPY from 180 to 280. That's a 100-point gain, right? Maybe another 20, 30% higher again. You're going to have economists out there and folks say it's going to be impossible. They're the same yo-yos that said that, 2, 3, 4 years ago. Eventually they're going to be right, and they're going to point to that one time where they said the market was unsustainable. But when you ask them to put a date on it, they have no idea. So my opinion is, put your fingers in your ears, ignore everybody else, and just trade what you see. And even if I am bullish and I'm wrong, we get below the 200-day, I can become a bear. My long-term outlook is bullish, at least for a couple years, probably, until something changes. But if something happens in the interim, I go with the flow. I don't have to be married to a single idea, unlike all these talking heads out there that you see on TV and stuff. Just my 2 cents for what it's worth. I'm a big chart guy, and I think the power of the money coming in and coming out, whether it's based on volume and getting above or below moving averages, to me is far more telling than someone's opinion, if you ask me. All right, Target and Walmart, they're talking about trade wars and stuff and how bad this is. And well, what do you know? Target just keeps going higher in the face of that. Walmart never really even dipped. You got to be careful when you go to the websites or watch news, whether it's MSNBC, the Communist News Network, CNN, whether you like Fox or anybody else. It doesn't much matter. They all got opinions. They're all trying to scare everybody. Meanwhile, the market just keeps going higher. You have presidential candidates 2 months ago because the current president wanted to do something on trade wars. They hated it. Now they love it. Now they don't. Everybody's got an opinion. When it comes to the market, fingers in the ears, trade what you see, not what you think, is my go-to. We can all have opinions, but opinions can get very expensive if you're wrong. Facebook. Now, Zuck is in the news because, according to Zero Hedge, there's an article, Facebook shares tumble after Zuck knew of questionable privacy practices. I also saw a similar article over at thestreet.com. So you guys can do your own homework, do your own research, but that did put pressure on Facebook. Here's what I would say. Look at this ledge, which came right into the 50-day moving average. We broke below it. You guys know what I'm going to tell you, right? 200 days the target. Well, we got there in one whole day, right? The moment we broke, the next day we were there. That's a huge drop. You're talking 177 down to 160 in a day. We then rally. They often say down in an elevator, up in an escalator. It took, 6 days to get back there, 5 days to get back there. And today we rolled over. Right now the target would be the 200-day moving average in purple. Before the bulls could claim a win They need to get above the 50-day. Lam Research, LRCX. These guys are a negative article out on chips, and Lam got beaten up here. Its target's going to be the 200-day now. You could say the lows. That would be fair to say 170, but the big target's going to be down near 200 because it also coincides with another swing low. That's about 163. Like, geez, that could be 16 points lower. And then I had a question on gold and silver, and what do I see? From a seasonality perspective, you guys know I like to bring in the financial charts. There's no bullish bias in a big way until January, February. And we're entering the summer, which is typically not the best time of the year for gold. If I go back, and what I would want to do is go 2 years and change this to a weekly chart on gold. We have a breakout bar here, but then there's all this overhead supply at 128 and 129. In fact, if I go 5 years, there's also overhead supply from 2016. For me to say this chart looks really bullish, we got to get above 130. Ballpark $1,300 an ounce on gold. It's not that far off, but it's still about $4 or $5. Otherwise, we're in a multi-year trading range. Just remember, January, 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 January. It's 6 for 6. The end of December into early February for gold in those basically 2 months worth of time. The summer's iffy either way. So I'm not really interested in trading gold right now because the odds aren't with me. And there's no fundamental reason that's propelling gold. Now just remember, if you're a gold bug or a gold bull, every time you hear a negative headline, your mind wants to go there and say, oh, that's good for gold. Gold hasn't done squat for years. So all this crap that's been happening, trade wars, currency, debt, all this stuff, interest rates, it's not doing anything. Net, it's in a trading range. We break the trading range on big volume and it's fundamentally based, then we can start maybe paying attention to gold bucking the trend seasonality wise and going higher. But until that happens, there's pretty much 2 months I want to trade gold bullish, and it is not now. Silver, SLV, something else we want to watch for too with silver is we want to see silver jumping with gold. That is not the case. Gold's trying to rally and silver can't get out of its own way. It's like stuck in the mud or in quicksand. Sure, some of the gold miners like GDX are popping, but if I take you back and give you a 5-year weekly chart on GDX, the gold mining ETF, what do you see? Whole lot of nothing. It's a 20+% trading range, but there's nothing significant. I could put alerts at $25. We get above there, that piques my interest because target's going to be 30, but that's still not that big. So they're still stuck in the mud, so to speak. That's it, guys. If the market does not move yet much tomorrow, there may not be a video, but there will definitely be a video on Sunday. That you can count on for sure. So with that, I wish you guys a fantastic rest of the week. Happy spring and early summer. The weather here in Pennsylvania has been awesome, and I hope you guys are enjoying it too where you are. Have a great day, guys. See you later.